Cashflow Chronicles. Hopefully everyone's having a good day. Some pretty decent ups in the market. The thing that was pulling me up was Bitcoin. Everything else was kind of flat to slightly down. But other than that, everything's kind of even keel at this point.
No.
No?
Disney, baby. Disney.
I do have some Disney. I didn't look at Disney. Is it up?
Disney, baby. You got activist.
I know it's back in the
all over
90s,
Disney.
but is I that hold on, let me check. No, my Roth is only up $187. What was down then?
A lot of other things, but Disney was up, baby. Disney was up at about 3.5%, almost at the highs today. So they're almost at the $94 mark.
What was down? Oh, Woodside pulled me down a little bit. Okay, cool.
Yep.
Excellent. Yeah, Disney. It's only $150 for me.
And my little regionals, DPST, that was up 4% today. They were up to almost 5.25% earlier.
They are.
I say
Nintendo was down 2%. There you go.
Mm-hmm.
Epsilon was up 4.6%. But yeah, it looked like the S&P is hitting a little bit of like a resistance around 4,500. So I'm curious if that's going to kind of persist. If we're going to see a little bit of a pullback now that we've seen a little bit of a rally from the 4,100 to 4,200 range up to the 4,500. I wonder if we're going to pull back just slight little bit. But Chris, you mentioned yesterday you wanted to talk about a company called Paycom, and I never really looked at it. And I'm kind of curious. I use Workday at UDoc. Do you use Workday? Are you a Paycom kind of guy? And then I started seeing like Baba Cochran is all about Paycom, or at least she's getting paid by Paycom to make advertisements. So I'm kind of curious when it comes. I know there's, how do I say this lightly? There could be multiple competitors in the space. From what it looked like, it's an HR / kind of like a pay system, hence Paycom. So what makes it different than ADP? What makes it different than Workday? And what intrigued you? Because they reported earnings a couple of weeks ago, it looked like. And I wasn't able to find a presentation, but I did find the 10Q. So curious about your thoughts about it.
So a couple of things about Paycom. You really have to dig into their DD to figure out what their problem was. This has been a fast-growing company for literally the last 10 years. They've grown their revenues significantly since they IPO'd about 10 years ago. They're also very shareholder friendly. So if you look at the dilution that they have, it's little to no dilution, which is very rare for a software company. And on top of it, they have a lot. Their executive compensation package is heavily tied towards stock performance. So there's a lot of incentives for them to keep going up. The one thing I like about them that they're completely cloud-based and they put the needs of the client first, right? One of the key weaknesses that they had during the quarter was actually because their product that they released, something called Betty, has been amazing for anyone that does payroll. So payroll typically is a tedious process which requires a lot of revisions and monotonous like looks, and you have to do all this extra shit. Betty, which is kind of like an AI program that lets you do payroll at the employee level, and it does all the self corrections and everything, and it's got really, really high net promoter scores. So the product itself is really good. The problem is it kind of also eats into their sales, because what happens is these companies also make money on selling services and selling corrections. And so, the CEO and the company explained it very well. They said, look, our product is so good, we're almost disrupting ourselves a little bit. But that also means that the adoption curve is actually really high as well. So my whole thing is right now the first thing we have to do before we go into anything related to Paycom is understanding what Paycom does and how it actually benefits users. And let me just show you.
Yeah, you pull that up. Let me hide some of this stuff. I can hide some of this. The thing that initially I got intrigued, I was just looking at the headline numbers there, and I looked at the balance sheet, the 10Q there really quick. Basically nil debt, and they have a lot of cash, right? And that's kind of cool. You kind of get into a situation where have a pretty high income producing business. So it gets back to what you were talking about with respect to all this is deployed, looks like over the cloud. Their margins seem to be relatively high-ish, but this is me coming into it blind. I literally have no idea about Paycom. Like I said, I use Workday, Workday at UDoc. And so, but that's initially what kind of hit me right in the face there was the lack of any debt.
Meet Betty. With Betty, now employees do their own payroll. And why not? They already manage their time cards, benefits, expenses, vacation requests, basically every important HR task. And when employees do their own payroll, that improves accuracy and reduces employer liability, all while giving them full insight into their paycheck and greater confidence it's correct. What does Betty do for you, the employer? For starters, you never have to build payroll again. Just pre-schedule recurring cycles and Betty self-starts, so you can get back to pursuing projects that improve the employee experience and move the needle. No more spending time identifying errors or chasing down the missing pieces to fix them. Betty's got it and ensures it's correct before payout for perfect payrolls every time. Employers will also enjoy fewer steps or days in the process, elimination of data re-entry, fewer direct deposit reversals, manual checks, and payroll voids, lower fees for corrections and adjustments, and increased peace of mind for company compliance.
Is Betty single or?
So you see all the stuff that's right there, less correction fees. Typically what happens is if there are corrections that need to be made where you have to do, like change deposits and do like what is that thing called, reversals. These are all things that typically your payroll system gets paid for as a fee to do it. But Betty is so good that the number of people requiring these corrections is next to nothing. That's why if you look at the net promoter score that Paycom has versus some other competitors, it blows them out the water. See, that's the key. So adoption in the short term may look like, oh my God, these guys' revenue is going to be down, but that's because they've released a product that's just doing such a good job. And they have growth prospects that are coming for Mexico and for Canada. So they're just introduced this product there. So they're growing like a weed, bro. This is a company that you really want to take a look at, and they're recovering nicely. I used Paycom at my last employer about 4 years ago. Dude, it was great. Literally, it was an online portal you log into, or you did it over the phone, and it was a very good experience. Now, I currently use a different system through PeopleSoft. It's okay for like a very simplified thing, but dude, I remember Paycom. Paycom was so simple, easy. It was just especially for medium-sized businesses. This is amazing. They also have like compliance tools that are built in, and the thing is, it's like based in the ground. I mean, from the ground to be a very, very light and efficient tool to get the job done. So, we'd have to actually speak to a few people who actually use Paycom, but in terms of net promoter scores, that's what I like about them. And on top of it, the product does seem to have a good amount of growth that's been pretty consistent over the last 5 to 10 years. They did actually do this time around a cut in guidance for 2024, and their guided growth was only about, I think, 10 to 15% compared to its historical amounts of about 25 to 30, which does mean that the business is slowing down. But when I saw that stock drop almost 48%, that kind of overcorrection wasn't warranted. So you can already see it's way above that giant correction, and it looks like it's going to slowly recover. So
yeah, let me pull it up. I didn't realize how much of an impact it truly hit, but it was big, and it was so year to date it's down over 44%, right? But let's just take in the last 3 months when it reported 3Q earnings, it dropped from like a 240, 245 down to 150. So that's like a 40% impact. Almost immediately,
48% in a day.
Yeah. And so that has since kind of come back slightly, but
go ahead, do the week
last month.
Because Yeah, once people digest the numbers, they'll see like, hey, wait a second, this company's got really strong cash flows, repeatable business.
No
They have a lot of
debts.
optionality, no debt. They have a lot of optionality, no dilution in terms of shares, you know, and CEO compensation and executive compensation is heavily tied towards stock price,
Yeah.
you know, so.
So let's get. So I appreciate that that little overview because that's really cool. And I will say, just out in the open, these HR slash like logistics companies have been a lifesaver for me because I remember joining UDoc 10 years ago, and it was just god awful. There was a website for training. There was a website for your performance. There was a website for pay. There was a website, and it's like, keeping track of all of that was such a pain. Now it's just for us, at least it's Workday, but I assume, it's the same sort of thing with Paycom. And it looks like Betty kind of offers the same sort of application, mobile application as Workday as well. So I'm just very thankful overall for these because being a cubicle kid, as I have been for the past 10 years, it's kind of very helpful. Chris, do you want me to pull up yours or do you want me to, I was just going to start pulling up the numbers, but you're looking at stuff in the background. I don't want to cut you off.
No. If you want, you can pull up the Patreon, because I put the numbers in there as well. But that may help.
Is this your page? No, this isn't your page.
No. I just open it from your perspective.
Yeah, very good.
Yeah.
Well, I was going to ask you if this is a Patreon exclusive because the last thing I want to do is get rid of or let free some of your good stuff. So let me see. Let me share here. Chris's Patreon. This is a behind the scenes of a fancy dancy. So which one? Oh, here you go. There you go.
Yep. Just go to show more and then zoom in. Yeah. So first was just a lot of background on them. If you scroll down, you'll see the numbers. So
yeah, growing at a pretty reasonable rate.
Yep.
40s to 30s to now kind of getting into the teens to 30s.
Mm-hmm. And if you look at their market cap actually has retreated down from about 30 billion to now to 10, so yeah. It's a very stark drop from where they were. If you keep scrolling down, you'll see actually how much of their gross margins and everything else. This business has 80% gross margins.
Yeah, it's okay. Pretty healthy.
And at the same time, their operating margins are just, pretty good. Like you're looking at 30, almost 28% operating margins. Net profit margins are growing, very little expansion of expense growth. Business is still growing. That just means all that money, that additional cash flow is going right back to shareholders. CEO compensation. Everyone looks at this and it's like, oh my God, the CEO's compensation is $211 million a year. That's crazy. But most of that CEO compensation is in the form of restricted stock units that vest over time with an absolutely crazy floor price. So he has to get to look, if you scroll down, you'll see his, and it's founder led, by the way. I don't know if people know this, by the way. He's the company is founder led. So if you scroll in, look at what the target has to be. The average volume weighted share of common stock over 20 consecutive trading days equals or exceeds $1,000 per share. So basically, the money that you can get, he has to get it to $1,000 a share. And the other tranche that he's getting has to be $1,750 in order to get it there. So, like I said, in terms of shareholder alignment, we're right there, man. So
see, I get a little bit of share-based compensation. I don't get nearly as much as some of these guys, but stuff like this, it makes me understand a little bit why some people do so much buybacks, because it's like, well, we could execute and that has some risk associated with executing, or we could just buy back 10% of the float and inflate the share price. But you know what I mean? It's like, so I kind of get it. Like it kind of like, it takes a strong individual to be like, no, instead of just buying back stock, we're going to actually do this for the long term. But I can also understand how buying back stock can be beneficial at the same time, right? Like I would love Palantir to buy back more stock because they've inflated their share count by 50% since they direct listed, right? It went from 1.5 billion shares to 2.3 billion shares. So I would love for them to buy back stock, but over time, right? I think right now they need to conserve energy and capital.
This was trading at $500 less than 2 years ago.
Yeah.
Check the stock price out real quick.
So I mean that's the thing I want to get into. Where is it here? So here's the stock price. So this is a $10.6 billion company right now. This is the last month's performance, but year to date, down 40-something percent.
5-year.
Here's the 5-year. So when everything was going to the moon, it was $547 a share. All right. So that's pretty crazy. Yeah, it's pretty crazy.
And they've been growing since. They're still growing.
And they've been growing. Yeah, that's where I want to get into. So it's a 10-point-something, just under $11 billion company. And now I'm kind of curious, like actually on some of these numbers of like what they actually generated. Let me pull it up, because if you start annualizing this stuff, like total revenue is $406 million, cool, 21% over the same period last year. Awesome, right? That's great. Net income is $75 million. Some people might like that, some people might not, but that's up. Up almost 50% compared to last year, because it was 52 million. So can't complain with that. So they're moving in the right direction associated with that. EBITDA is up 33% looks like, from 126 to 165. Cash they're building. It was 400 million last year. Sorry, 400 million at the end of last year. And in the first 9 months, they've built that by over $84 million. So they're moving that in the right direction, right? They're paying dividends. They're repurchasing shares. There's zero debt, basically zero debt comparatively to what they're making. They could pay it off today, and I'm sure they're just paying it off over time. So it goes back to, what you're thinking. The total revenues here, and this is where I want to start doing some mental math. I'm sharing, right? I'm not. Okay, very good. This is where I want to start doing some mental math. So revenues, 1.67 billion, right? So, okay, we got that out of the way. EBITDA, let's just say 700 million, right? So I'm doing some math. I don't know if you can see the calculator, but you probably can't. 10.66 billion divided by 0.715. That, in terms of price to EBITDA, is a 15x, which for a company that could potentially be growing even at double-digit pace in terms of percentage growth, is cheap. And even if you were to like annualize this gap net income and stuff of the like, I mean, you're looking at, let's just say, if you were to say 75 times 4, that's 300. So even, it's a price to earnings of like 30x, right? Yeah. 30, 35x, something like that. It can be considered cheap, especially if it's growing at a reasonable pace like this. What I don't understand though, Chris, is like, is it at a spot? Maybe this is where we go back to your Patreon. Is it at a spot where the OpEx was, because you showed the gross margins. Gross margins are north of 80%, phenomenal, right? You can't beat that. You really can't get much better than that. So from a cost of goods sold, you're literally just like deploying software. You can't get much better than 80 to 85%. I get that. But from a from a net margin, when you actually get to the bottom line of net income, it's like a 20-ish%. Is that going to climb? Or is that like, and that's the thing that's like, I'm concerned, like as revenue, is it kind of like where Palantir is, where it's just getting to the point where revenues are getting to a place where you're piercing through, your OpEx is staying flat, and your net income is going to climb into the 30s and 40s, because that's when you're starting to compete with, in terms of net margins, like a Visa and a MasterCard, because those guys, have really good net margins. So I'll let you fly with that.
Look, the key to it is looking at this. They're operating cash flows, which have been CAGRing at a 30% per year. The thing is, the great thing about software companies that know how to do good good, what is it called? Like good expense management is that every additional dollar of revenue is going to get better and better and better for you in terms of margin. Because what happens is you're not hiring a whole bunch of people. You're not investing in all this CapEx on factories. You're not putting in X, Y, and Z in making, additional improvements to the product. So this is the key to software, because the cost that you have to get to profitability have already been baked in. So as long as your operating expenses don't go crazy high, any additional revenue growth goes directly to that bottom line, and this is the key. So you look at their operating and their cash from operations, look at where they've gone from 2015, 22 million to right now to almost 479 million. Right. And this is likely to keep going for a decade. If you annualize this out for another 5 to 10 years, you do a DCF, this is an undervalued company,
Mm.
Yeah.
So I guess my thought process is it going to get closer to $1 billion a year? And at that point, I guess you're looking at a price to
Dude, the share buybacks that they're going to be utilize. What's going to happen is this cash flow generation, they're going to have to do something with all that cash. What are they going to do? Are they going to expand the dividend? Probably not, because the CEO and executive comp is tied to the share price. So what does that mean? They're going to be doing a crap ton of share buybacks. This is an AutoZone in the making, where literally all that additional cash flow that they keep getting, buy back more shares, buy back more shares. They only have a 57 million share float, which means that they have a lot of room where they can keep buying back shares. It's going to be interesting to see what happens in the next 5 years. But right now, I would say that they're likely to go crazy on share buybacks in the next couple of years, especially with the stock being down as much as it is today.
Yeah, I mean that's an interesting one. I've never seen this one. This is why I love being able to kind of go through some of these numbers, because there's literally thousands upon thousands of stocks out there where, and you might say like, oh, Workday is probably the premier company to invest in this sort of space, or ADP that's been literally producing dividends since Kingdom Come, right? It's an opportunity to be able to bring companies like this to not only, our audience, but even me. Like I had no idea about Paycom. And looking at this, I'd seen people talk about PAYC in the past, but it's one of those things where it's like when you see 8 ticker symbols in a tweet, or you see 8 ticker symbols on a Facebook post or something like that, it's going to be hard for you to look at every single one. But Chris is pulling up the net promoter score here, so let's just take a listen.
Okay, this is Workday's net promoter score, a 33. Okay, let's look at where's this? Let's look at Paycom. Net promote, everything is A plus 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 plus, all that shit. But let me get that NPS score, man. Where?
They're not there. 63%.
Where is it? No, it's hold on. Net NPS Paycom. There it is. Number one in terms of 4 competitors. They're paid. Damn it, man. 57 compared to Workday.
Workday was 33.
Yeah. Then let's compare it to ADP. ADP NPS. Where was it? Here we go. It's 60. So it's got relatively the same net promoter score, almost around it, similar to Paycom. But ADP targets much larger businesses, where Paycom does, I think, smaller and medium-sized businesses.
And I feel like ADP doesn't really focus on like the HR and logistics side of the business, right? I think that they mostly just focus on the pay aspect of it, right? And just pushing through and making sure direct deposits work, and that piece of it. But I could be wrong. I mean, ADP is a great business as well, and you can't downplay it. But in terms of the valuation of the stock, I don't know where ADP
is a market cap. Hold on, let's see.
In the hundreds, I think it has to be
$97 billion. So that just goes to show where Paycom is relative to these guys. I mean, and look at how much money is actually 4.5 billion a quarter. So
Yeah.
that means that there is a huge market for businesses like this,
Yeah.
So,
And especially, I mean, I think that, I guess it does say human resources management software. So maybe they are expanding to a little bit beyond just the pay aspect of things. But, to me, I think it's these kind of businesses where it just sometimes the stock just gets ahead of itself. And I think with what happened in 2021, so many stocks unfortunately got ahead of themselves, like Shopify, for example. And it gives people a really bad name. It's like Shopify is a stock that was an up and comer that was starting to do really, really well in 2020. And unfortunately, just because of how stocks blew up in the retail community, I think the Shopify just went to the moon. And, that's not necessarily a bad thing. But then when it comes back down to reality, everyone's like, oh, Shopify is a shit stock. Shopify is a great company. And actually, it was a really good buy at the end of 2022, early 2023. Just like a lot of these companies that we're talking about, like I was loading up on Palantir, I was loading up on a lot of different companies that everyone was kind of like saying, oh, they're dog shit because they were down 80 something %. But it just goes to show you, it's just like that allows people to have a little bit of optionality, right? It allows you to get in when opportunities are there. Paycom here, it could be giving you an opportunity. Intel, just in 2Q, when they took that big hit, went into the 30s, that was them giving you a potential opportunity. It is companies and opportunities like that where you want to look out for and to say, you know what, this is an established business. It's doing well. It's relatively cheap. It's growing. It doesn't make sense why it's trading here. And it just could be an opportunistic moment that eventually right sizes. And it, generally speaking, right sizes pretty quick. Something like this, you could see yourself up. I mean, let's just take the last, what did it do? In this opportunity, it dropped to, I'm not sharing this. Let me share. In this opportunity here, it dropped, this is ADP. Let me pull up Paycom. It dropped to 150, 148, right? And it's already up since that point to 176. So that's about 15 or so %, if I remember correctly. I'm not the best at math, but let's just say 176 minus 148 divided by the 148, that's 19%. So right then and there, like, of course, you're probably not going to buy that day. But generally speaking, if something like this happens of this drastic of a magnitude, I wait for, especially when you're selling puts, I wait for the analyst to downgrade, because that's what sometimes ends up happening to some of these companies when it gets piled on like this. It, generally speaking, over the next week will get piled on more, and then after that you get a little bit of relief. And it's not all the time, but it's, sometimes that's the case. And the same thing when you see rallies as well. When a company comes out with outstanding earnings and the exact opposite happens when it goes up 20% in a day, now everybody and their mom is coming out with an analyst report saying that it's going to be, the next $1 trillion stock, and everyone's upgrading it, and it just keeps going up. And then eventually it starts to roll off a little bit. So just kind of be cautious, especially if you're selling options around some.
Look at our friend Google. Look at what happened with Google.
Yeah, Google's a prime example of this. Let's pull it up because it's back to where it was pre-earnings.
So earnings, it took a nosedive because they missed only 200 million in fucking cloud growth, and they got smashed almost $10 for not 10. What is it? Almost how much was it? Was that 140? And it got smashed at so 20.
Like 138, 140. Yeah.
Yeah. And so that was really unjustified. But once the market digested the numbers and realized that, hey, this is not a bad company by any means, look at the recovery. So anyone who was on the Patreon buying up those spreads, congratulations. You made money, baby. Good for you.
That's the hope.
Cha-ching, cha-ching.
Yeah, I was a bitch. I only sold some puts. I was like anticipating that the sell-off was going to continue, and I was going to try to buy some shares, but
dude, I remember
I still made money.
the day it fell, everyone was looking at those spreads and they were just like, Chris, what are we gonna do? Like our spreads are down. And I wrote like a really nice letter, if you want to pull that up, to all the people. Because that's like one of the other things about like when I try to like write up anything on the Patreon, I try to give people like an understanding of what I'm seeing, right? And someone reached out to me and said, look, man, like I appreciate you gave me the confidence I needed to double down when it was necessary, so it wasn't just like
review.
It's the one. Take
Spreads
a look. It's
update
like,
September 20.
No.
October 25th.
Just bring up the whole thing. I'll tell you which one it is.
Hi, Chris, the they see again. Okay.
Yeah. So this one right here. So this one was the review. So and if you go to show more, you'll see all the data points,
Which part?
Yes, that was it. So this is one of them, but you see like at the bottom, like overall the thesis on Google remains intact, and this presents an opportunity to invest in a company while the market is temporarily off balance. Remember? And then you wrote back too, I'll be buying more in the dips.
It didn't give me much time below 120, if at all.
I know.
Nope, never did.
Yeah.
I did sell a 110 or 115 put, and I think I bought it back when it hit 60 or 70 bucks profit.
Yeah.
Which it was a couple $100, if anything. It wasn't to the extent of the spreads. So congrats to the folks that were writing the spreads.
Look at Dean. Look at what Dean wrote. It's like, I remember that day I was on a plane trying to catch bids on the spreads.
Yeah, man,
I was doing the same thing, dude. I was rushing. I was like, my wife, I was talking to her. I was like, you know what happened? Did I tell you what happened?
No,
so I had to ask my wife to borrow money from her because I had degenerated into more spreads.
I think you mentioned it. I don't know if it was that or you mentioned it in passing. I didn't realize that like you were. I think you were just saying, yeah.
I was like, honey, listen, I got this. Like, so my account and I keep a good amount of cash, right? But my account had dropped off so much. My wife wakes up in the morning. I was like, honey, can you help me? I need some money. She's like, how much do you need? I was like, listen, I did not expect this, this is just an opportunity, baby. I was trying to explain to her. I felt bad because she was like, you're usually the responsible one, So it was just one of the funniest things. She's like, how does someone who's got all this money come to me to ask me for money right now? So yeah. I had to borrow some money. I paid her back right away. I mean, we keep two separate accounts only because she takes care of everything here in Georgia. I typically take care of all my expenses from the New York side of things. And eventually I'm gonna, when I sell the New York apartment, then it's good. Then I'm kind of like chilling. So right now she's like we have this sword and shield kind of thing going on where she's like the shield and I'm the sword. So any income that I have goes towards generating more money and generating income, getting to a point where we are going to be set financially while she takes care of the day-to-day stuff.
Did she charge you interest?
I gave her interest in bed. You know what I'm saying?
She's gonna start knocking on the door like she did yesterday. Quick question for you, and we have a little bit of time. I'm curious. One of the things I've been thinking about. I didn't run this by you yet, so feel free to shoot it down. One thing that see, I told you, you're in trouble now, man.
It's all right. Whatever.
You'll deal with it.
Whatever. I don't care.
The producer wife is gonna start yanking the camera and shutting off your mic.
Get out of here! All right, leave me alone.
Still owe me money. I am going to charge.
I didn't charge. I don't owe you. I paid you double back.
15%.
Yo, you like a loan shark. Get out of here. I charged you double. Get out of
She's going to ask for 5 points on Friday at noon. Otherwise, she's going to put you in a...
Bro, never borrow money from this one again, dude. Bro, it's loan shark rates right here.
Oh, man. I love it.
Jeez.
So, question, and like I said, I didn't run this past you. Do you want to take questions from the audience? Do you want to give them the StreamYard link, or I guess it's the Streamlab link? You tell me. I'm kind of curious what your thoughts are. They have some
Just
people.
post comments, and if people want to just put
People
comments in
ask
the comment section,
some
we can
comments.
highlight them.
There were some people asking a little bit about the stream portfolio. We talked a little bit about it yesterday. We're up over $500, so pretty cool with that. Like Chris talked about, DPST is up. A few other positions.
Do you want to just take a quick screenshot and just
I'll
show
take a quick screenshot. We'll give some people an opportunity to feed in to the chat section. And apologies, we're not intentionally ignoring you guys. Chris is always just so good to talk with. So anything after like 9:39, we'll take questions. And apologies, I didn't mean to intentionally cut anybody off. But in the meantime, I'll just take a screenshot as to how the portfolio is doing. We're up almost 6%, Chris, which is pretty cool overall. And we still have some cash. So if we come up with any ideas as to what we want to buy, let's exit.
Dude, CCL has been running, bro.
Has it really?
CCL.
Damn.
I am so pissed because I haven't released my due diligence on them yet, but they have been riding up. And one of the Patreon people, he actually bought some spreads on CCL. I didn't get a chance to buy it. I've been tapped out of cash.
That's the problem, man. That's the problem sometimes, is that you just get so much opportunities at times that it's hard. But here's the portfolio. So far, we talked a little bit about it yesterday.
It's always nice to see all the green, baby.
DPST. We kind of bought a lot of the stuff at the right time. So TQQQ is still the leader. Upseller is at 15%. DPST 7% up overall. So it's kind of cool. I think this is the first time the portfolio went over 500 bones. So I got with everybody looking last week. December should be a good month to add. We should be adding about 50% more capital in December timeframe. Somebody on Twitch is asking if this is live. This is live, my guy. So the other one is Bros. That's up 10%. Disney's up 7%. DPST is almost 7.5%. Nintendo.
Might have to add
everything.
We might have to add Paycom.
Yeah, and we can buy partial shares, and we should be getting, I forget what I got last year or last month. It was a down month, I think, just overall, because there weren't too many holidays or anything like that. So I think $170 should be coming in next week. Or the 21st or 22nd. So generally that's when the YouTube money comes in. And don't forget,
we've got dividend payers, so our dividends will come in too.
That's true. Do we have any monthly? Oh, TLT. When does TLT pay? Hold on, let me pull
I think the 15th, but let me double check.
Too much stuff.
They usually pay on the 1st of the month.
On the 1st? Okay. Yeah. I was just gonna pull up the dividend view. Let's just see. Did we talk about Target? Did Target report today?
Yeah, Target was up considerably today.
Was it really? That's interesting. Yeah. Are you long TLT? Have you zoomed out that chart? Somebody on Twitch is asking. Yeah, we could talk a little bit about TLT. Let me stop sharing this screen here. TLT, the reason why TLT is something that we're kind of, well, at least I'm looking at right now. And I actually talked about
Scott. I'll talk to you guys about Tellurian in a little bit. Just let's finish up with this, and then we'll go into Tellurian.
Yeah, Tellurian's a good one. Let me reshare here. So the reason why we like TLT is for this exact reason of why it's down, right? And the reversal that's about to happen. So why was TLT up so much going from 2019, 2018 into 2020? And that's because zero interest rate policies push this to zero. Like the interest rates to zero. What happens when bond rates go to zero? The value of the bonds go up in order to make it any sense. So, and of course, throughout 2021, 2022, when they're raising interest rates, it's going to suppress all those values to the point where now you're basically getting to the point where you're at, hopefully, at least our interpretation is that the federal funds rate's at 5.5%. They're now discussing that they're at a pause point and eventually going to reverse that. So what's going to happen if they cut it 4.5 to 4 to hopefully 3.5? I don't think we're going to get back to zero unless there's some major event happening here. But if you have 5.5% yielding bonds, and next thing you know, they cut it to 4.5%, the value of those bonds goes through the roof because you can't get a 5.5% yielding bond in say 6 months, 7 months. So people are going to push the value of those things up. So what's that mean for TLT? It means the exact opposite from what's happened from 2021 to 2023 in TLT is going to happen. Is it going to go back up to $160 a share? I don't think so. I mean, that's a little bit exuberant. But at the end of the day, you're going to see a large movement back into something like a TLT because of that reason, because bonds are now coming back into favor. You always want to be buying bonds or how do I say this? The value of bonds will go up when interest rates goes down. And that's why it's been such a phenomenal purchase of bonds from 1980 to the last 40 years, except for the last, say, 3.
Go max. Hit the max button. You'll see. There you go.
This is since 2008 timeframe, but you know it's been good. I don't have the whole interest rate thing in here, but basically bonds have been a phenomenal investment since the 80s for this reason, because generally speaking, we went from the late 70s, early 80s at double-digit yields to the point where in 2008, 2009 timeframe, we were down to like 5 or 6%, and then we went to zero interest rate policy since 2013 and beyond. Of course, the value of bonds is going to go through the fucking roof because now people are they have to bid up the value of their bonds. So anyway, just some food for thought. I think some people think they know a little bit about bonds, and it could be a gamble. It could not play off as well as we want to. And actually, one of the things I talked about, Jesse Dow said he bought a little bit of TLT, and then he also said he bought a little bit of TMF. My thought process is actually maybe do some TMF spreads and see how those potentially might look. And
I'm not gonna touch TMF spreads for now until I know the Fed turns into rate cutting mode. Some people are gonna bid things up, but the problem with these 3x leveraged ETFs is that they have huge fees, huge performance fees. If you look at the performance fees, they're pretty big.
Bonds haven't been good since the 80s. Are we looking at the same details, or I'm pretty sure bonds have returned relatively well.
I think in terms of, I think that person's relative, relatively compared to equities, they haven't performed nearly as good. But that's just how it is. You're looking at fixed income. The people who are traditionally buyers of bonds, they're looking for fixed income. Right. So it depends on when you got in. Like, imagine right now you had got into a 30-year fixed at 15% yield in 1985. You would have collected 15% year over year in interest payments for the next 30 years, non-callable. Does that feel good? Because that seems like a really good return. Now, it doesn't compound because it doesn't mean that every year you're going to keep buying. But dude, 15% on an asset, that means that it just, like I said, it depends on where you are in life and what your ultimate goal is, So,
Chris, can you give us a Spark Notes? I didn't really look at Cisco or Palo Alto. I know June here looks at Palo Alto. She's an investor. But I know Cisco tanked. How did Palo Alto do? Let me see. PNA, NW. How did they do? They did tank. It's 6%. So down 6-7% for the day. That's not that bad. Cisco, I saw drop, pretty big. I think it was like 11 to 15%. But maybe that's something we touch on tomorrow after we read a little bit. Let's just see. Any thoughts on funded accounts? Not sure if they're just hitting your radar, gaining popularity. I have some people that talk to me, and I think they're talking about people that I don't know, and maybe Jackalope can correct me if I'm wrong. Basically, people paying a fee to get funded accounts for let's just say $100,000 in funds. I keep seeing that, and to me, it's just like,
what is that about? What is that about?
My brother-in-law was talking to me about it, and you basically, if you make money, you're able to keep, 50% of the profits or something like that. But at the end of the day, it's it's pretty strict. Like, you can't lose a lot of money, and if you lose money, then so it's to me, it's just paying a monthly fee, and you're probably going to end up losing the ability to trade the money. So they just take your fee. So basically, you're paying an entry fee to be able to trade somebody else's money.
Wait, it says funded accounts like Apex. You pass a sim, then eventually you get paid real money. What? That seems weird, but okay.
Let's just see. So Scott wanted to talk about Tell. We'll talk about that in a minute.
Yeah,
We need
absolutely.
Elf. Did you ever have Elf? I know that's a Jeremy special. No problems with it.
I did not buy any Elf just yet. I was still doing a lot of due diligence on the guys, and like I said, I'm not a female, so I don't know, man. Like I have to really talk to some females that can give me some insights into their business and their business model. Like what I've heard so far is that they are a growing business. I did miss out on gains. I mean, and if you look at their last quarter, they're just absolutely killing it, dude. Like all the financials are ringing in the right direction. Take a look at this. Hold on. This was their last thing. Revenue is up 76%. Net income is up 184%. Earnings per share is up 176%. Net profit margin expanded 61%. Operating income is in the $40 million mark. I mean, you can't get any better than that, you know? And what's the market cap on this? It's a $6 billion market cap company with that kind of performance. That's pretty goddamn good, you know? So I have to, like I said, I'm still doing more DD on this. This is the part where if you're not a girl, you don't know a lot of things that are happening in the industry. I spoke to my wife, and my wife said this was like cheap makeup that like high school girls and college girls wear. So I'm like, okay, like what do I know more than that? You know, I know some of the people in the comments section were talking about it, saying, oh, you know, they're good, blah blah blah. But like I said, this is where I'm way out of my depth and my element, and the only thing I can go with is just the numbers that I'm seeing. You know, so I don't use their products. I don't know, you know, the segment that they're targeting really. I do know that they did an acquisition for a facial care line that they're probably going to be able to leverage their existing relationships with distributors in order to market and sell. So it's a value creative thing. So yeah, it's definitely one of those things that like I have to do way more DD on, you know.
Oh wow, Target's up 18%. I can't believe I didn't see that. Okay. Yeah. Maybe we could talk about that tomorrow. So somebody asked about TQQQ, betting against the Qs. No, that's SQQQ. T stands for triple leveraged. TQQQ to the positive side. SQQQ is shorting it by 3x to the negative side.
But yeah, see, this is the kind of stuff that like sometimes we have to. Right there, like look at what MCJ said right there. I asked my sister about Elf at $8, and they told me it was cheap product, so I didn't buy. So you know, I'm the same way. I asked my wife, like that's the person that I know. So
yeah. Target earnings weren't great. They were just helped by low expectations and extra inventory. Interesting. Well, it's interesting that the stock is up that much. I'll have to.
Yeah, I have to do more research on the Target thing as well.
Any reason why Celsius has been pulling back? Is it a major opportunity? We talked about Celsius the other day. It could be an opportunity that we looked at. Pulling back, though, from 61 to 52. Was that earnings? Yeah, that was around earnings
This
time.
is after the split. Post-split.
Post-split. So let's see.
Well, didn't their like founder just pass away or something?
Did he really? Let me see.
Yeah.
I think we read about that when we were talking about it. But earnings just came out, so it might just be the fact that earnings came out, generally speaking, you know, it's not down that bad. I mean, the whole scheme of things, it's up 40, 50% to date still. So recent pullback, but we did look a little bit about it. The international sales is something that could be highlighted. They have very little international sales.
Yeah, and supposedly that could be something that's challenging for them. So I don't know. It'll be an interesting thing to see. And then also there is some rumor that what is that thing called? That Pepsi may actually be buying more of the company. Like, I'm hearing rumors of that. I'm not sure if it's confirmed or anything, but definitely
Chris,
something
this,
to consider.
this is the same gentleman that's been talking about TLT for a little bit on Twitch. Do you want to answer this one? Why would you buy a piece of TLT versus us buying the 5.3% 3-month yielding bond?
Because you don't know what interest rates are going to be in 3 months from now. They could be much lower. They could be down to 2%. We get hit by a recession, the Fed cuts rates to 2%. With TLT, you're basically buying all these bonds that are long duration bonds, and so you're going to see those have capital appreciation. Whereas if you just have short-term bonds, they're not going to appreciate. So yeah, in face value right now, it's like, oh, why would I buy a long bond for 4-point-something% where I can buy a short-term bond for 5.3? 5.3% short-term bonds are not guaranteed to be around a year from now to 2 years from now. If you think that the deflationary scenario is going to be coming in the next 6 months to a year, and the Fed is likely to cut interest rates, you want to be buying long duration now rather than later.
Yeah, so it's basically a long-term discussion about, do you actually think that federal funds rates are going to get cut or not? And if that's the case, then
what's the question? Why is the portfolio of TLT lower bonds going to appreciate? Okay, so imagine right now you have a bond that guarantees you a fixed return for the next 20 years, right? What ends up happening is people will want that bond and buy that up and appreciate the price of that bond in the future, because the interest rate that they get on the short term is going to go down. The bet on the long duration bond is that short duration bonds will get cut. I mean, interest rates will get cut in the short term, and those short-term reductions means that they are going to be less appealing, which means companies, public pension funds, hedge funds, endowments, they are looking for higher yielding safe assets to put their money into. So what are they going to be doing? They're going to be buying long duration bonds. So you're going to have people take their short-term money, and instead of just putting it in short term, they're going to be buying long-term money, because you're getting a fixed return way out into the future. That's why.
Yep. And so if federal funds rate get cut to 3% and you're sitting on a 5% bond that's for the next 20 years, you could easily call your price, right? Because people can't go out and buy a 5% bond anymore. So you could sell that at a 4.5% or 4%, and people will still buy it, because what are they going to do? Go out and buy the 3%? They'd rather buy yours, so it pushes the value of whatever you're holding up in terms of that. Or you just hold it to fruition, right? Just keep collecting that 5% comparatively to 3%. But I think that's what the bet is on TLT. So see people talking about a little bit about the prop firms. Let's just see. Alpha's up 5x in 2 years. Let's just see. Oh, Alpha there. Let's just see. Chris, are you seeing any? Do you want to move over to Tel?
Okay, so Tellurian. I am not necessarily bullish on Tellurian right now, because I don't even know if they'll survive. Suki keeps hinting at, which is Sharif Suki. He's the godfather of natural gas. He's been hinting at this natural gas export terminal, but he just can't seem to get the financing done. And it has been nothing but the pain trade for so many people, and it keeps going down further and further. I think a lot of people, like Suki, has taken a lot of people for a ride. I don't think that they are necessarily going to survive. So probably
But
not.
that was the thought as well, a little bit. I mean, I know it's a different story, but that was the same thought when LNG came out, right? When Cheniere came out, that everyone thought that they were getting taken for a ride. And but to me, I think things have happened way faster than I expected. I think that there's going to be a lot of LNG trains coming online in the next few years. Where I see at the moment is I think a lot of them got sanctioned in the late 2010 timeframe. So a lot of them are starting to come on now. And I think where the 2015 to 2020 timeframe, and so a lot of them are starting to come on now. Where I see now a deficit, at least in the in the medium term is in the second half of this decade. So like 2026 and beyond, I think that there's going to be a lot of shortage of LNG. And because I think a lot of people were impacted in 2020 to 2022, basically, of not having a lot of good gas prices until what happened in Russia, in Ukraine, or what happened to Ukraine with when Russia invaded, rather, to actually give gas prices a little bit of a boost. And so with that, I think you've seen a resurgence of some of this. But I mean, other than you have Next Decade, which actually got approval.
That's the one that I'm actually more in line with. Next Decade actually has their FID done. Let me just quickly show you guys what I'm talking about. So this is their presentation from November. Next Decade has a approved site already. They've got FID, and they've got multiple trains that can be coming out in the future. So in terms of like demand that's there, financing is there. They've got strong counterparties, because that's what you need in order to successfully create these projects, where you need partnerships from companies like Enbridge to give you the pipelines necessary to get the natural gas to the what is it called, for the liquefaction not factory, but liquefaction trains. You need companies like Bechtel who do the actual construction. Right? Mm-hmm. You need Baker Hughes and Air Products to do the servicing. You need equity partners that are going to do the financing. And you need customers that are saying, hey, listen, we will guarantee that we are going to buy from you at a future date and time, even though the project is currently uncertain. Because these guys will guarantee that these guys invest, and these guys are guaranteed to make sure that they're paying these guys to do the construction. Right. And also at the same time, this gives confidence to these guys to say, yeah, we are going to invest in building a pipeline to you guys. Right. And then it gives these guys an opportunity to say, hey, there's future contracts here for us as well. So you kind of need all 5 of these things to work. And right now, Suki is missing 3 pieces. Suki is not getting the customers he needs based on the pricing model. So this whole thing is out. He's lost multiple, for Tellurian, I'm talking about Tellurian, he's lost multiple interested parties. So this one is a no-go. Equity partners, this is a no-go. Yeah. There's no one that wants to put the money in, right? The only one that he's got on the hook right now is Bechtel, who's willing to do the construction for, I think, equity, but they're just like doing a very, very limited amount of work. They're not doing a lot of work, So I'm just saying, right now, Tellurians doesn't exactly look very enticing. So, and
this is a pretty cool area, right? Like, this is the north part of I forget what canal that is, but directly to the south. East of there is actually Boca Chica, where SpaceX does some launching. So it's pretty cool area. And I actually thought about buying some houses in Brownsville for Boca Chica for SpaceX. And then also now you have Port Isabel to the northeast of here, which is some kind of like bay-ish real estate. But to me, I think that this is a good opportunity, because I think a lot of people will be moving into the area here, and also it's pretty close to the border as well. So you have a lot of potential transit.
Matt, maybe me and you should maybe we can do a Cashflow Chronicles episode where we go visit the site.
Yeah, maybe. Yeah, you could fly down here, spend the night, and then you can drive down. It's not too far. It's probably like a 6-hour drive or something like that from Houston.
Yeah. Go visit Juarez, maybe, because Mexico is right around the corner.
Yeah, it's right down there, right?
Yeah.
But I think that this is the good part, right? Is you start to see all these term contracts that are huge, right? This is the stuff that you need to really guarantee. And you can see that this is already filled, right? All these, what you're looking for is the SPA value, right? The MTPA, and it's already filled of up to 16 megatons per annum. And that is really what's going to pay the bills. So you've had these people originate all these contracts with whomever. And that's kind of the goal. And, they've kind of said, this is what we're buying. And you can see at the bottom how much they've actually sold. So like some of them have already found, 10 to 33% of all the different volumes that they need to be able to fill it out. Like Total is like a third of all this, and they also own a percentage in equity. So it's pretty cool to be able to see kind of come to shape. Whereas you see a lot of other folks kind of say we'll sell at spot, and spot can be good, right? But that's the thing is like with these things, selling at spot can be good because then you can sell it to whomever at whenever. But you also want to make sure that you have these long dated kind of originated contracts and agreement, because you need to pay back all the funds, right? So the bank is probably only going to lend you like billions of dollars if you have some of these originations already kind of put in secure, signs and everything like that. Anyway, just some thoughts.
Yeah. So the key to for the next decade is going to be around this 20% economic interest. So, you're basically getting a piece of this. You're not getting the whole thing yet. The rest of it is owned by private equity and strategic investors like Total and these guys. But it also means that you're taking a lot of risk off the table because you have financing in place, so their economic interests make sure that the project goes through, because at the end of the day, you need money. These things are not cheap. These are expensive things to construct. So right now the equity valuations look like this with phase one. So right now you're seeing this is the different percentages that are each allocation is coming down to, so next decade common stock equity is going to be here. But what's good is that right here in trains 4 and 5, which are projected to come online later, is actually going to be what is that thing called? More equity. They're going to have more equity. And so you can see here that in the future, they're actually going to have between 1.3 to about $1 billion of distributable cash flow coming in once all 5 trains are coming online. So if you think about it, look at the price, like the market cap of next decade right now is $1 billion. So think of it this way. For the next 20 years, you will be collecting 100% of the money, the market cap right now. That's where, like, once this project is fully realized and they're generating $1 billion of distributable cash flow, you will be getting every year $4 in next decade. Okay, let me rephrase that. You will get a $4 of cash for putting in $4 today. How does that sound to you, Matt?
It sounds good if they get to get to actually shipping LNG,
exactly,
right?
Exactly. But see, here's the thing. This is where the bet comes in, right? This is where risk to reward has to be taken into consideration, because the good
thing is, though, Chris, is this is the first phase, right? There's a second phase, I think, where they're going to get it like another 10 MTPA. Correct me if I'm wrong. So the first phase is just the first 3 trains, and I think that's what gets you to the 16 or something. And then I could be wrong. I could be mixing up my sites here, but I think the second tranche is where it gets you to like 25 or so MTPA. Yeah, if I remember correctly. It's another 4.5 million, or 4.5 MTPA per train. And I think that there's a 4th and 5th train.
Yeah. So the key here is, number one, it's going to take some time. All right. They don't have timeline. They don't have construction done by any means yet. It's going to take time. Right. So you're not looking at seeing a lot of returns until probably 2020. I'd say probably 2026, 2027. So whatever you're buying right now, it's going to be dead money for a long time in terms of distributable cash flows. So you're buying almost like a lottery ticket on this. Now, to some people, they're saying, look, man, why would I buy it today? I could just wait until 25 or 26. And that's an option. You may or may not get that price. So if you look at something like Cheniere, like LNG, if you look at the stock right here, if you had got into LNG when they were still working on it, this was $10, right? Around $15 is when things got really interesting. But if you look at here before they were doing any sort of construction, This is only $2.56. Once they got into making real money, distributable cash flows, this is what happened. Okay. So you're looking at, what is this, $2 to $171? What is that? What
Not
is
enough.
that?
273x from what it
Yeah.
kind of IPO'd at. Well, that's 65 cents. So even if you were to go, from when it was $2, I mean, it's pretty insane.
So this is where you'd have to apply. This is the perfect thing to DCA, believe it or not. Like instead of, do you remember I was talking the other day, we were talking about, hey, just don't drink coffee every day. Just take hey, I'm going to, instead
cheap.
of getting this up. Yeah,
I mean, it's
$4.
cheap. I mean, maybe we should do a dive on this, because this is what Next and this is what TAL could look like in a good basis. And like the amount of cash flow this is generating, and this isn't even, remind me, Chris, this doesn't even have all 5 trains up and running, right? This is only 3 or 4.
Yeah, they have more trains. They have more trains coming, baby. Got more trains.
And I think they have a spot for 6 trains. And then the thing that bothered me a little bit about Cheniere is like they had, and it's understandable why they do it, because these are such big debt obligations. So they had like Cheniere Partners, they had Cheniere Energy, and they were like, part of it owned Corpus Christi Holdings, part of it didn't hold Corpus Christi Holdings. And so that's the part of when you're dealing with some of these things, you could get lost. So like I originally invested in something called CQP, which was Cheniere Energy Partners, and this distributed a dividend, initially, and it, a pretty good one at that. And so you can see what happened with this one, but it's not nearly growing to the extent of what LNG did, but which is the non-partnership. It's just the C Corp. But even this has done relatively well. But I held this from like the 28 to 30 something, $35 range, and I was just collecting the dividend. So, I mean, I'm sure what might end up happening is you might end up having something like this where they do a second offering, like Next might do a second offering. They might do Next Partners, and they might take $100 or $200 million associated with their offering that they do and own a piece of it. And a lot of it, a lot of companies do stuff like that. That's what NextEra Energy is doing. And that's what, sorry, I know I'm throwing Next around because there's Next Decade, NextEra Energy. Everyone's talking about Next because they're all talking about transition fuels or renewables. So it just gets you to think a little bit about this. And
the risk here is that we don't have a carbonized future, right? So LNG is just going to be a bridge fuel into solar and wind or hydro. And I don't think that's even a remote possibility. I think LNG is here to stay. I think LNG is the cleanest carbon fuel that's there. A lot of major economies rely on it for electricity production. And I don't know if you know this, but LNG is actually the thing that's going to be powering rockets in the future. And you know how I discovered that?
How, Chris?
Through you, the Rocket Lab.
Oh, there you
Rocket
go.
Lab.
Yeah, they do methane.
Yeah, they do methane instead of another fuel. So when it comes down to it, methane, especially in the United States, it's much, much cheaper because we have an abundant supply of natural gas. So, it makes sense to launch rockets from here in the U.S. So it's very
the U.S. has the U.S., Qatar, Russia, Australia, all have very significant positions. And that right now is actually part of the energy piece and dominance that the United States has. Most of the world does not trade at $3 for natural gas, right? If you actually look at some of the European super major oil companies, they have to quote both Henry Hub, because a lot of them have US portfolios. A lot of them also quote TTF, which is the Dutch. And there's a large discrepancy between the two.
And
Japan also is up there as well. So I think the thing that's beautiful about liquefied natural gas is it has yet got to a place where it has globally commoditized as, let's say, oil. Oil is a liquid, so it's a lot easier to move around than, say, liquefied natural gas. And it doesn't cost as much to put things in barrels and or like big tanks and move them across. Versus LNG, you have to freeze it, you have to pressurize it to shit, reduce the volume of it by 600 times to be able to move it across oceans. And that just requires a lot of these big ass trains that we're talking about with Next and with TEL and Cheniere. And that all being said, I mean, that is what the United States has a huge abundance of. And if you think about it, if you're able to pick it up from the United States, or what I was doing in Trinidad, pick it up from Trinidad for $3 or so and ship it to Japan for $15, think about the margin you're going to be able to charge, especially when you're talking about billions upon billions of cubic feet, or MTPA is what we kind of phrase it to here. So it ends up being a lot of money.
You know what sucks, dude? There's a country that's so impoverished, but they have amazing natural gas resources. And if they only develop those natural gas resources, they could literally revolutionize their entire economy. And that country is Mozambique. Mozambique has a lot of natural gas.
It's been really tough.
But you know, this is the problem. There's so many African countries that have like natural resource wealth, but the extraction process and the global instability part holds them back so much, man. If only they got
one
their
to
shit
see.
together,
So there's 2 countries to really watch. Mozambique, you kind of touched on that. Well, I guess 3 countries. Namibia is going through an energy revolution right now with a lot of exploration of oil and gas assets by Total, Chevron, Shell. So I'm curious to see how that
Don't
goes.
you goddamn say Angola. Don't you fucking say Angola.
No, Angola's already been kind of developed in the LNG piece.
I hate Angola, dude. Angola is cobalt.
Cobalt,
Remember?
Jesus.
It's like a wound. It's like a wound that gets opened up every time, man.
Yeah.
Anytime I look at Angola, it's like that.
Angola has some LNG actually, and I know because I was rolling up some of our global assets and looking at it and reporting on it, so that was pretty cool. But Mauritania and Senegal, somebody was talking about Cosmos in your guys's finance junkies today, and I was talking a little bit about Cosmos. I can't talk too much about what's going on in Mauritania and Senegal, just because, but Cosmos had a lot of discoveries in the late 2000s, early 2010 timeframe, to the point where they don't have enough capital to develop it because they're a relatively small company. I think they're less than 5 billion market cap at this point. But they basically farmed down a lot of it to some other players. And with that, they're about to start ramping up with that. So Cosmos is potentially another one as well that it's been putting a lot of capital into something that has yet to get it back. And that's probably going to happen here in the next 6 months to a year. Is their cash flow is just going to go through the roof once their floating their floating LNG terminal goes up in more on the border of Mauritania and Senegal. And they actually just took operatorship of the one that's in Mauritania, or was it Senegal, whichever is the more northern of the countries. And they just took like 90% of it over. So they're either going to farm that down to somebody else. And I think a lot of it has dependence upon how the first project of Tortue does, which is that first LNG, floating LNG project that's going to be coming online the next 6 months. So I'm curious to see, for my own equity benefit as well. And so if any of you guys are ever curious, those guys do pretty good. They used to do more frontier exploration, and we're focusing on really like the key access in sort of the areas of like Namibia and some of these other African countries kind of on the western coast. And after they got a few good producing regions, like they bought over some stuff in the Deepwater Gulf of Mexico, they have some stuff in Ghana, and now they have the Mauritania and Senegal region kind of going to be producing value for them. They've stopped really trying to be frontier explorers, and they've more so developed themselves into just kind of becoming a pretty medium, small to medium sized producer. And I anticipate eventually they're just going to get bought out because their assets are pretty big. So it's not like they have a lot of small assets. I see a lot of small companies. They'll pick up like 5% of this project, 5% of that project. These guys have very concentrated assets generally. And they try to take big pieces of it. So they're generally like big swingers, right? If they end up swinging and hitting, they keep on to it. But if they end up missing, that's okay because they have some of these other projects that have now been able to fund things kind of going forward. But I like Cosmos. I bought a lot of them during the pandemic and made a pretty good penny off of them.
Here's a question. What do you think about Total as a super major? Because my thing is hasn't really performed that well, but every time I do, God, man, I don't want to go into oil and natural gas because I've always had I've had a losing streak in oil and natural gas. I mean, I've had winning streaks too, but I'm always in it for too long, and I get decimated when things go absolutely wrong, right? So,
and I think it's on the brink. I think you just need one little thing for it to really drop down to $30-$40 again for a snap crash. So, and I think we're not too far away from that, to be honest with you, because we've been on a pretty good hot streak for the past, aside from the pandemic. I mean, from 2018 to now, things have looked relatively good from an oil price perspective, and like above $60 a barrel. So it's been a while since it snapped below $60 a barrel, other than that brief moment during the pandemic when things were going to zero, right? Nobody was going to use oil anymore. And, everyone thought that renewables were going to save us. And it's like, no, you kind of have to wait a couple decades before that really comes through.
We need to do some DD on uranium. Everyone keeps talking about it, and I really have to start looking at it more. Uranium might be a topic that we could bring up. I wish we knew some uranium investors who could explain.
There's a lot on Twitter. Yeah, there's a lot of people in Twitter. Yeah, that love uranium, and it's very political. Like nuclear is very political, where some people think it's God's gift. I personally, think that's okay. I don't think that it's as dangerous as many people think, but I think politically there's so many smear campaigns about it that.
And this is the one that everyone keeps highlighting, by the way. So 3D ammonia, if you want to get in and tell us about uranium, please tell us, because it looks like it's done phenomenal in terms of performance, and that this is only the beginning for these guys. So, let's, like I said, it's worth deep diving. I mean, look at these numbers, man. That's just. Then again, it's a Canadian company, and you know the whole thing about investing in Canadian companies.
Tell us, Chris.
Huh? No, it's just that funny thing that Kelly put. It's like, most of the money that I've lost is in Canadian money, and most of the things I've gained is the U.S. market.
Canadian investors love investing in Canada, and it's so funny. It's just like, ooh. It's almost verbatim like this. It's like, ooh, I have this really, really, really cool company. There's a better one in the United States, but I'm just going to buy the one that only focuses on investing in Pennsylvania. It's like, it doesn't make any sense, right? Like I get it. It's like, I understand you have national pride and stuff like that. And if you're looking for dividend income and banks, they have really well-run banks, that did really well during the financial crisis. So I don't want to take that away from them, but it's like, I get it. Not all, like, just like how if I lived in Germany or if I lived in Trinidad, I wouldn't be investing in, like, if I lived back in Trinidad, like, I don't know if I'd be investing in the best banking company in Trinidad. I'd probably still look at buying in the US, right? It's just because Trinidad only has 1.5 million people. The United States has over 300 million people. What's probably going to be a better run bank? So anyway, just some food for thought there. But it's like, I think it's so funny how sometimes Canadian investors get so Canadian minded. And I get sometimes they just want to invest where they are and what they know, but it just goes to show you how blinded some people can be. And but I'm not to say all Canadian stocks are bad. Shopify, I think, is going to do great in the long term. So anyway.
Yeah, I'm just, like I said, I have to do a lot more DD on uranium. I just haven't had a chance to really sit down, and because the thing is, like, whenever you do DD, the first thing you got to do is learn about the industry. And I've never ever done any research on the uranium industry at all. All I know is, you have rich deposits of uranium that have to be enriched and then turned in pelletized, and then you put them into nuclear reactors, and then you generate electricity from the heating that's generated there, that spins that spins a turbine with an inverter, and there you go, electricity is generated. But I don't know how the supply chain actually works. Then there's like all different types of fuels, because I know I was reading about something called a thorium reactor. Thorium is a naturally occurring isotope in India that could be used to generate electricity. So that's that. So even among the isotopes, you have got different. It's I think it's a lot. It's really, really interesting, but it requires a lot of research and a lot of knowledge on the background. And it's not as simple as oil and natural gas, which, we can kind of at least, because there's just been so much history behind it that we kind of know what to look for. With uranium, it's like, okay, what's going on? The other part is a lot of countries have been shutting their nuclear plants down. Are there any plans to kind of restart them? Because that means that maybe fuel sources may not.
So France is a really big. I don't know much about uranium market. I've had some sponsors on the channel in the past since 2020 that have asked and paid for opportunities to be on the channel. Where I've interviewed some of the CEOs. I've looked through some of the investor presentations. So if anybody's curious about some uranium, I'm not saying invest in the companies, but I'm saying there's some DD, and videos on the channel if anybody's curious. The thought process around some of this crap. Where was I kind of going with that? Shit, I just lost it.
Oh, you seem to have a fan from Trinidad. It's like, Matt,
I miss Trinidad. Man.
You worked in Trinidad. I'm from Trinidad.
Yeah,
right there. Hope you enjoyed.
Dimitri, thanks for stopping by, man. Yeah, loved it. Right before the pandemic, I was there from 2019 to 2020, and so glad I got out of there because I was supposed to stay another 2 years. And so as much as I would have loved to stay, it wasn't the same country because everything was on lockdown until like late 2022, and they just finally started getting back into the carnival shape. They had like a carnival light in 2022, and then they had a carnival, like a full-on carnival in 2023, which I heard was a blast. But yeah, man, I lived in West Moorings, west of Port of Spain. It was a great time. I miss my time in Trinidad, but it got down to day bay, had some doubles, had some Sahina, all that good stuff. It was a blast down in Trinidad. I'd love to talk about it more. But crap, what was I thinking about with uranium? Hot Chris, shit.
Well, you figure that out. I'll tell you a funny story. I was trying to date this girl in high school, and she was Guyanese, which is Guyana is like another island around that area, right? Now, the funny thing is, I had no idea what Guyana was. I was just in terms of like I just didn't
geography,
know. Geography, I didn't know. So I'm talking to her. We're on this date, and I'm like, so what part of India are you from? And she's like, I'm not Indian, I'm Guyanese, right? And I was like, Guyanese? What do you mean? Like, I've never heard of that. What part of India is that? She's like, it's not India. It's West island it's West Indian, and it's in South America. I'm like, there are Indians in South America?
Yeah.
Like, what's going on here? So then she told me the whole thing, and she never gave me a second chance after that. I mean, bro, I don't know what happened. I thought that she would like to educate me further, but no, it turns out that I might have offended her a little bit.
They're spicy, man. No, you don't want to get on the wrong side of a Trini or a Guyanese woman. That's for damn sure. Or just a Caribbean woman in general. I love them. Geez, I love my brown women from all colors, shapes, and sizes down at Trinidad, man. It was some eye candy.
One of my coworkers that I used to work with, he's Guyanese, and we always joke about like different things, and so we were talking. It's like, man, George, how does it feel to be the ancestor of the people that got on the boats when all the white people came by and said, hey, we got a free boat ride, and your ancestors were stupid enough to believe them,
right?
And so, dude, he gives me so much shit. I give him so much shit.
Yeah. I do remember what I was going to talk about with uranium. So after Fukushima happened in 2012 with Japan, everybody in Europe was basically just like, never again, right? The only people that weren't really like that was France. France actually has a huge amount of nuclear reactors, which, believe it or not, is one of the very few things that France does that I actually agree with. But like even Germany, that's part of the reason why natural gas prices started spiking through the roof in 2022 was because a lot of people were starting to shut down some of the nuclear reactors. Germany is actually either fully shut down or just extended because of the natural gas crisis that was going on, or the energy crisis last year in 2022. So I need to double check on that. But everybody during that time last year on Twitter, there was always spaces about nuclear and going back because of what was kind of happening. And it's kind of a shame because the what happened at Fukushima wasn't actually a problem of the nuclear reactors, right? It was because of the tsunami that unfortunately happened to hit the island, and with that, it damaged the reactor. So it wasn't like as if what happened at Chernobyl or what happened at 3 Mile Island, where they started to have a partial meltdown, or I guess Chernobyl was more than a partial meltdown, but just some food for thought. Like Fukushima, while there was a meltdown there, a partial meltdown, it wasn't necessarily because of bad operatorship. And so, gets you to think. And I think nuclear in Japan is still a huge piece of it, right? I think the majority of their energy either comes from natural gas or uranium. And I think both of those have to be imported.
Yeah. Thanks, Dimitri. I will definitely take you up on that offer. Maybe one day, Matt, we'll head down to Trinidad to your old stomping grounds.
Oh, man.
So
we'll have to go to Tobago. There you can get a really nice 20-person, maybe if Junkie Con continues, when we can go around the world, we'll just be like, you know what? Me and Hot Chris are going to just post up on Tobago in some 20-person villa, and whoever wants to come, because you spend $1,500, $2,000, you have this beautiful place for a week, and people can just come as they see fit. You know what I mean? I've thought about doing that. Just like, I'm going there. Anybody that wants to come, here's an open invitation. I'll let you know if it's full. Yeah.
Okay. We'll see about that. Lo and behold, you invite the fucking axe murderer. I've been plotting to kill these junkies.
We didn't have an axe murderer in Vegas, but we kept it pretty small. So
yeah. All right, dude. Well, it's about an hour and 30 minutes.
Yeah,
always
appreciate
a pleasure.
It. Always.
Yeah.
Thank you, guys.
All right.
Talk
Take care,
to you guys
everyone.
Tomorrow. Cheers.
Have a good one.